pleasure to be in conversation with Suresh Narayan of Nestle, given the kind of momentous changes that we're seeing in the economy, with growth rebounding and with a whole host of new developments at Nestle itself. Suresh, great to have you with us. Thanks for being with us on ET Now. Now, the comeback in the economy, high-frequency data, and also recent FMCG sales have been nothing short of stunning. Take us through where we stand at the moment, how you feel things are evolving.
The trajectory of the FMCG industry has been extremely heartening. I mean, as we discussed the last time when we met, I think the consumer goods industry has probably been it has been one of the least impacted industries in terms of the overall economy. You know, there are others which are hurting and which have been decimated in this pandemic. And I think to that extent, it once again reinforces the inherent strength of the consumption story in India. You know, irrespective of the fact that we might have had a GDP contraction of minus 24%. And irrespective of the fact that in the subsequent quarters, we will only be building back towards where we were to reach the 2019 levels in the financial, in the fiscal year that we are talking about. But the fact of the matter is that I believe that consumption would still be relatively strong and robust. It may go up and down. I mean, that's more a matter of degree, but the secular trend line will still remain upwards.
Okay, let's talk about raw material prices as well and how things have evolved there. Of course, they play a large role in operating margin moves on as well for Nestle. What's your understanding, A, on how, of course, you see those prices moving? Because on one side, we are seeing reforms on the agricultural side of things. We've seen a lot of measures incremental to boost things on that front. On the other side, inflation is not necessarily coming back. So are we looking at a different scenario for Nestle with the agri reforms and the APM reforms? Do you see that significantly impacting things going forward?
Look, I think as far as APMC is concerned and the agri reforms are concerned, I think these are absolutely the step in the right direction. And I believe that longer term, these are the kind of policy measures that we need to take in order to ensure that there is a freedom for the farmer and for the farming community to sell to the entities that they believe will give them the best realization. Obviously, there is still the debate on whether they need a certain minimum support level, and that's where I think the entire economic and political debate is taking place. Now, as far as Nestle is concerned, we really have 3 or 4 major commodities that impact us. One of them is milk. Milk is not an APMC item is not an item that goes through the mandis of any kind. And there I believe that the model that has been set largely due to the cooperatives, and I think here the cooperative movement has done a tremendous job, and also some private players like us, like Nestle, have set up a very fair, transparent, robust, and time-tested mechanism, which I believe will carry on. And at the moment, the way we look at milk prices it is fairly benign. The good part is that some of the demand that had vanished from the out-of-home segment and from the catering segment has started to come back. So milk prices will start to firm up a bit, but nevertheless, they will not be at the very highly escalated rates that they were in the past. Wheat is also one of our commodities. I think there again, a lot of benefit has come by way of better crops. I believe the common procurement has been high. The Kharif crop is also looking forward to be a fairly robust crop. That means that possibly, even despite the relatively high food inflation, this would also remain relatively under control. The third one is, of course, sugar. And sugar, we know that there has been a relative benign nature of this. There has not been too much of a surge happening on the sugar front. And the other are, of course, things like oils, where again, there has been relative stability. So from an overall commodity perspective, while I agree with you that the level of inflation, overall inflation is still higher than what we are used to, I believe that the overall basket will still be a manageable set of circumstances that we should be able to tide over as a company.
Okay, so given that margins have gone up, how much of your savings at this point has been due to cost-cutting efforts, and how much of it is more because of pricing power, brand growth, and developments on that front?
Look, I think as a company, we operate on three spectrums. One is, of course, the commodity cost mitigation that we do with economies of scale, better productivity, stocking opportunities, etc. So a part of it is clearly due to that. We also have, apart from the commodity price headwinds or tailwinds, as the case may be, we also have a fairly robust cost containment program. And this is not just the one-off costs that we are looking at in the pandemic, lower travel, lower conferencing, and stuff like that. We also look at other process costs to see that we are able to have a trajectory, a downward trajectory over a period of time that is beneficial in terms of the overall trajectory of volumes and value that we record from time to time. And if these two are really unable to hold the commodity surge that might take place, that is where the brand and pricing related issues come to play. I think one of the things I'm extremely proud of is that in the last 5 years, we've tried to maintain the consistency and simplicity of the business model, which is penetration-led volume growth, which is hinging on innovation, renovation, both price points and the premium part of the portfolio doing its bit, strong digital engagements, strong engagements as far as distribution infrastructure is concerned. And a combination of all this is what has led to a sustained performance. I mean, apart from the last quarter, if you look at the previous quarter, which was probably the only quarter where we had a slightly muted performance of 2.6%, the previous 10 quarters has been straight double digit. So I think this model seems to be working for us, and we don't want to disturb it too much under the circumstances.
So can I assume that double-digit growth is here to stay in the medium term, that volume growth is looking robust?
Certainly, penetration-led volume growth will be a centerpiece of whatever we will do. The second piece is that we will sell those categories and come up with those initiatives which are not margin dilutive to us either. So we would not be really going in for those initiatives which are what I call empty calorie initiatives, that just selling a lot of NPS and not really having too much of a residual value in terms of value to the company.
Suresh, you're looking to invest about 2,600 crores over the next 3-4 years. And every time we chat, I try and dig for more in terms of, which categories you're looking at investing in. Any more updates or developments or anything more that you can share with us on that front?
It is a statement of confidence in the future of Nestle in India. I think that's something that I would really like to highlight. I think that's an important statement. We compete for investment dollars with China, with ASEAN, with the rest of the world. And therefore, when we get these investments, it means that the business case that we're able to exhibit from track record and from a prospect in India is fairly strong. That is number one. Number two is 99% of what I sell in India is made in India. So very well and truly, when we talk about Make in India, this company has been embracing it from 1961. When the first factory of Nestle at Moga came up. So in the 8 factories that we have today, what we produce is the 99% of what I sell in this country. Number 3 is that the 2,600 crores, 26 billion, which comes after the previous surge that we had between 2009 and 2013 of about 33 billion. would go behind the factory in Sanand. And the factory in Sanand is, I'm happy to inform you, is coming up quite well. It had a little bit of a setback during the pandemic, but now it has come back. It's coming back. Construction is on, and we look at this as being our most digitally savvy factory, a paperless factory, environmentally the most friendly factory, the most diverse factory. 50% of the workforce would be women, and we look at it as a modern temple of manufacturing dedicated to food processing in India. So I think I really look at it as an important initiative for the company and also a contribution to the country. Apart from the Sanand factory, there are expansions in capacity. So these are not either compliance related or indeed any other infrastructure related. These are capacity building measures in our factory in Nanjangud for the coffee business, in Ponda for our chocolate and confectionery business, and in the milks and nutrition business in our facilities in Sabalkha and in Moga. So therefore, this is across the board, across categories, and therefore that's also the other story of the company, that we are looking at secular growth across categories. And it is not just a milk and nutrition company or a Maggi company or a Kit Kat company. I think it is a secular nature of the brands, the resonance and the ramifications that we are looking at over a period of time.
Absolutely. Now, Nestle's mantra has been premiumization as well as penetration, both. While we're not really seeing India's per capita go higher at this point, premiumization is also still aspirational. Do you feel that the plans to tap into that segment of the market are still going to take a while before they fructify?
I really call it the hero of the pandemic is really the surge of demand for trustworthy, good quality, good nutrition, and safe products coming out of the Bharat, as we call it. So the tier 2, tier 3 towns and the tier 4 towns and the rural markets are actually asking for better quality and safer products. I don't know whether it is as a consequence of the pandemic or indeed there has been a journey towards better brands and better consumption, at least in the consumer goods space. So I see this as a very positive trend. Consumers today across the country, including smaller towns and in rural areas, are asking for brands which are safer, which are more nutritious, which have got offerings in terms of better immunity, better longer-term outcomes for their families, and they are willing to pay a certain premium for it. Yes, it may not be a complete strategy that you would call that shifting the entire market into a majority premium portfolio, but definitively there are opportunities based on consumer trends that we are seeing. And indeed, you see this not just in the food space, you also see it in a lot of other consumer goods space as well.
How do you see the market shifting from unorganized to organized players as well? Wanted to get your thoughts on that, because the categories in which Nestle is dominant is, are where branded players, whether it be Kit Kat, Maggi, baby food, are all fairly prevalent. Do you think that while the economy is migrating, from unorganized to unorganized, there might be seismic shifts that we see in consumer patterns?
I think regional competitors and small players are definitely going to benefit from the surge in the packaged goods market, certainly for foods. I mean, by all estimates, today a $35 billion market of branded packaged foods in this country is likely to double in the next couple of years. Now, whether that happens in the next 2 to 3 years or 3 to 4 years, depending on the economic outcome, the fact is that the branded packaged industry is going to grow quite well. All the beneficiaries of this most certainly are not going to be just the big players. And in fact, when I invest something like 2,600 crores in the business, there is a multiplier effect, as you know very well. And in foods, and that's why I'm excited about the food processing industry, the multiplier effect is anywhere between 2 to 4 as globally established, which means that there will be additional suppliers created, additional logistics created, additional services created, and some of these additional suppliers created will also look at coming up with their own brands, coming up with their own propositions, and indeed team up with other smaller players regionally. So it is very well possible that the surge in packaged goods that will take place, there will be a beneficiary of ethically straight, good quality, good value, and longer term players, albeit small, but if they do this on a consistent basis, they do have a place under the sun, and they will be beneficiaries of this. And I think that is good for India, because we need, as you know, in India, we need more number of medium and large enterprises to grow as compared to most of the other peer countries in the world. And I think this would be a good way of doing it, and that's where the production-linked incentives that have been announced by the government, where food processing is also a beneficiary. I look forward to reading more details about it, because it will be good for the country. This is what will create the kind of employment footprint and the opportunity footprint for entrepreneurs in this country.
And always great to get your perspective, on how the industry is likely to evolve. Suresh, we're going to take a very quick break. We're in conversation with Suresh Narayan of Nestle. Do stay tuned. Back in just a moment.
Investing in fixed deposits? Invest in government bonds too. Tenures from 91 days to 40 years. Contact your SEBI-registered broker.
Welcome back. We're in conversation with Suresh Narayan of Nestle to get a better sense of really how things are evolving at the group and also in the industry. Suresh, what are the chances that Nestle also may end up thinking along the lines of what we're hearing on Made in India, Made for the World, themes that are currently running very strong. Given the abundance of milk, of sugar, for example, that we have here, do you feel there's a possibility of this becoming more of a manufacturing base for the world?
Look, I think one of the compelling cases for food processing, and I've been shouting this from the rooftops whenever I get the opportunity, is very high. We are the world's biggest producer of milk, 176 million tons. We are the second biggest in terms of cereals. We are the second biggest in terms of fruits and vegetables. Today, the conversion into processed products is just about 10%. The kind of food waste that we have in the country, raw material waste, is about 92,000 crores. So $1.5 billion is what we are putting as clearly as waste. So if there is one sector which can benefit from the conversion of abundant raw material into processed products and into consumable products, it is a food processing industry. And yes, for Nestle, about 5% of our turnover comes from exports. And this is really playing to not only other countries in South Asia, but also 30 to 40 countries across the world. There is a surge, there is a demand for what I call Indian ethnic foods. I mean, the fact of the matter is that a lot of youngsters who went to the US or went to UK to study, or to Canada to study at universities, they carried with them, 2 t-shirts, 2 jeans, and 18 kilos of Maggi. And the fact is that when they go there, settle themselves, they still want the taste of India. And I think it's good for them to get a brand like Maggi available there. So in every sense, there will be greater opportunities for this as we go forward.
When we spoke last, and we had spoken about the distribution challenges, how you've been impacted, particularly when we'd first seen the pandemic hit. You'd also talked about how the consumer habits really weren't going to change. Through this entire period, what's really surprised you the most when it comes to consumer behaviors and patterns and how things have shaped up, and where have you been disappointed?
Look, I think what I've been surprised by is the kind of quick shift that consumers have made, especially across channels. I mean, the kind of e-commerce surge that has taken place has been truly heartening. I mean, it has been enormous. Our own business, from about 1% of contribution, is up to 3.5% in just 1 year flat. This might have taken us a couple of years to build up to. So I think the consumer's capability and flexibility to shift in the circumstances to a shopping opportunity that is relevant for him or her is extremely high. And I think that is a very, very good lesson that has come out of the pandemic. Equally, the kind of buoyancy as far as the humble kirana store is concerned, the humble dukan is concerned, which is really where my heart is because I've been trained and I've been nurtured in that, is also been very, very heartening that small retail has also got a big role to play in the post-COVID world in terms of access, in terms of assortment, in terms of servicing, etc., etc. I think those definitely are the really heartening, positive stories that have come out of it. I think in terms of disappointments, I really don't have any major disappointments as far as the consumer journey is concerned, because the consumer has wisely chosen credible brands, trustworthy brands, safe brands, asking for better nutrition, asking for better value. I think the disappointment has been, to some extent, the real serious meltdown of the out of home, and I think that is really tragic. And I think that is something that will take time to build back, because that was a substantive part of the business, not really necessarily of Nestle, but of many other entities, and that unfortunately will take some time to build back to what it was in the pre-COVID days.
Suresh, relevance will continue to drive growth and dominance will drive return ratios. How do you ensure that?
Look, I'm a little uncomfortable with the word dominance. I don't think any company has got the right to be dominant. I think a company has got every kind of effort that it needs to do to be relevant and resonant. I think if I'm relevant and resonant in terms of what I have to offer as brands, if I am trustworthy, if I'm credible, if I'm ethical, and if I offer fair value for the money that I expect the consumer to shell out, and I have enough armory in terms of research, development, technological capabilities, and channel and marketing capabilities to be able to market it to you, I think that is the only right that a company has. Dominance, whether it happens or it does not happen, is a consequence of all of this. And I would rather get myself and my team to be humbled by the service that we do for consumers, rather than to be swayed by the arrogance of the word dominance.
Suresh, always a pleasure speaking with you. Thank you so much for taking the time out. It was great chatting with you here on ET Now. We wish you all the best and look forward to speaking again soon.